this is obviously a mistake, because as you know, the theme of this DLD is going to be wild. And we talk about something that used to be wild 10 years ago, but is becoming mainstream, crypto. Nowadays, everything is about AI. That's the wild thing. What brings us to this conversation, nevertheless, it's really not wild anymore. I'm deeply interested in the technical aspect of crypto, unfortunately not so much on the financial, otherwise I might not have to work anymore. When blockchain came up, I was deeply interested in the aspect of democratizing a general ledger, ownership through bits and bytes. And there's a long criticism about blockchain. Warren Buffett would say it doesn't have a value. I fundamentally disagree. It has a very strong value because crypto basically embodies trust. It's a technical representation of trust in a world where you don't need to trust anyone. So no one can pick up the phone, no government, no world leader, no central bank, and regulate. It's an inherently democratic protocol driven by technical trust. And all this had become a huge success. It had become mainstream by now. Bitcoin alone, I checked it this morning, has a market capitalization of 1.6 or 1.7 trillion euro. It's nothing but a protocol, but it has an inherent value. Now, DLD, 10 years ago, we would have talked about all this, about Merkle trees and how the trust is embodied. Today, it's mainstream, and with me on stage is Matthias. And we're sitting here because 2 months ago, we had a dinner conversation. It was by chance that we're sitting next to each other, and we talked about crypto, and every dinner ends at some point. And I was looking for an opportunity to continue that conversation. So I called Steffi and said, can we do a fireside chat so that we can continue the discussion? Matthias, it's great to have you here. And basically just, I think we need to start again because the others might not know what we have already talked about. Matthias, who are you? What brings you here?
I mean, apparently a dinner conversation of two individuals who were probably 10 years ago a hype and now more mainstream. That's us, and I truly enjoyed the conversation. And thanks a lot for having me and for giving me the opportunity to continue that conversation. By the way, kudos for this event, just to start with. Thanks also for the nice introduction. So 1 or 2 words about myself and our group. So our group indeed is 160 years old. We're the 6th largest exchange group in Europe. We operate exchanges in Germany. This will not surprise you, given our pretty local name. We also operate an exchange in Sweden and one in Switzerland. And we think of ourselves as pioneers when it comes to crypto. To put things into perspective, 25% of our revenues comes from crypto and digital assets, which makes us among the classic exchange group in Europe, the exchange group with the largest crypto business. But that's not all, of course. I was closely following the earlier conversation on the importance of capital markets. So for instance, in Sweden, we have an exchange where we do a lot of IPOs of SMEs. And just a lateral thought, picking on this conversation earlier, the stage before us, the US is a great example, but there are also great examples in Europe, and Sweden is one of them. 60% of trading in SME stocks happens in Little Sweden in Europe. So there are even examples in Europe that shows that it's possible. Now, but back to the group. So we are pioneers in crypto, in digital asset, and I personally have been with the group for a bit more than 4 years. And prior to that, I was with McKinsey, the management consultancy, and I was doing banking and exchanges and digital work.
Thank you so much. So now we need to basically close the gap between the technical view and the financial view. And I would like to start from a B2B perspective. Should Hubert Burda Media take crypto assets on the balance sheet? And if so, how?
And it's
Please be convincing, because there are board members here as well that I might have to convince later.
Yeah.
Andreas is looking skeptical, I know he is.
Honestly, I mean, as a company, you got money, you had capital to deploy. Either because of Burda, or you get it from your shareholders, or from your investors, and you should put it to use. And I personally would focus on doing what you're very good at, media, etc., etc. You're not a crypto investment company.
You're not helping me here.
No, it's totally fine. I think there are a lot of, and I know there are a lot of companies where it makes sense, not necessarily to put it on the balance sheet, but for instance, companies doing trade with parts of the world where there is crypto, stablecoins, and other important topics. I think we'll touch upon that later. But if I were Burda, I would do what I'm very good at, right? For instance, these conferences, I would not become an investment management firm.
Now, assuming I'm not following your advice, and I feel like there are very prominent examples, X being one, Tesla being one, who decided they want to basically in the treasury take a bit of crypto on the balance sheet. Back in the days, you had to do through all these very complex protocols, and you probably have to build up cold storage and all these things that usual treasury would not know how to do. I understand a lot of companies are taking crypto on the ledger nowadays, and I understand that Börse Stuttgart can help because you have financial instruments that actually make it easy.
Yeah, a lot of companies do crypto as well as stablecoins, and indeed we are an infrastructure provider. We do provide infrastructure for companies, but particularly also for financial institutions. And you mentioned, right, crypto going mainstream, so a lot of people in this room will have crypto. And those of you in the room who've made it, if you ask your financial advisor, probably they will tell you allocate a certain proportion of your personal wealth to crypto. But crypto goes beyond that, and some of you will have followed the news that just an example, that the German cooperative banks and the German savings banks, which are on one hand very conservative banking groups, and on the other hand retail banking giants. The cooperative banks, they have 30 million retail customers. The savings banks have 50 million retail customers. And they will, during the course of 2026, the rollout has already started, they will offer crypto, Bitcoin and co. to their banking clients, to the broader masses. And they need an infrastructure partner for that. They need a partner who does the trading and the custody for them, and that's us. That's something where we combine, on one hand, our DNA in infrastructure and reliable infrastructure, 160 years, and we want to at least be around for another 160 years, right? So we'll not bet the bank, not the exchange, and not the cryptos of our customers on one hand, and our technical or digital abilities on the other.
If you provide these services, do you hold the crypto yourself and then package it into a financial product, or do you basically trade and sell other people's packages?
Yeah. So we keep crypto in custody for our customers. So either for our institutional customers or for the customers of the bank. So if you buy crypto via your bank and the bank partners, hopefully with us or another serious player, your cryptos will be held in custody in our custody. It is ISO certified, it has a license, a European or a BaFin license. It is insured by Munich Re, so that's the stable part. And there are, of course, also players who package crypto into financial instruments. You can trade them on our exchange, but we are not a crypto securities product provider.
If you hold them in your custody, is there a vault somewhere in Stuttgart where you have a digital key? I mean, this is keeping it ledger and keeping it safe is a quite scary thing because you can get hacked.
Totally. I think it's yes, we operate the ledger. I personally happen not to have the key, which is, I think, a good thing. I see also board member of a regulator here, so I think we're very serious on that one. And on a very serious note, of course, I mean, if you have billions in custody, as in crypto, as in the traditional world, right, you have a certain operational risk. And how do we address this risk, right? First of all, as I said, right, we do operate a license. We are constantly checked and controlled. We are ISO certified, I mentioned that. It is insured, and we have a system where the majority of the crypto we hold in custody is in a so-called cold wallet, which is not connected to the internet, so you cannot access and hack it via the internet, which makes it safe.
Now, I personally would say if exchanges and banks have started doing and offering crypto, and this has started a couple of years ago, it really has become mainstream. Let's look a bit into the future. There's a lot of questions around the financial system. We see high inflations in all the major currencies. I think there's a question around trust and influence on the currency. And then the good old, nothing against the good old banking world, but it's slow, it's expensive if you wire money across countries. My feeling is crypto will change this. Do you share that view? Is crypto the financing of the future?
It is definitely an important part. So first of all, when you say like the expensiveness and the complexity of financial institutions, I mean, we are privileged and so far we live in stable conditions in the so-called Western world. There are other parts of this world where you don't have access to financial infrastructure, where you pay a lot of money to transfer money from A to B. If you're a migrant worker and you want to send money home and you go to a bank, it costs you a lot of money. I mean, it's actually a shame. If you just transfer your Bitcoin or your stable coin, it's much cheaper. So it is very true. It is an element of democratization. Very true. The second thing is, and I want to say that, market infrastructure, capital market infrastructure is critical infrastructure. And yesterday we heard a lot about critical infrastructure, the importance of critical infrastructure. We heard a lot about European sovereignty. Right now, when it comes to capital markets, which is absolutely key, for venture, for everything, it's key infrastructure, capital markets. Right now, when it comes to core infrastructure, Europe in capital markets is still sovereign. So we have exchange groups, we have CCPs, we have securities depositories under the European flag. Europe is already less sovereign when it comes to payments. European payments is dominated by US payment giants. And if we now do a good job as a Europe, right, we not only move our classic electronic market infrastructure to the digital age, i.e. blockchain, but we also leverage it to come up with a truly European infrastructure. The panel prior to us, there was a lot of talk about the European capital market, and we definitely need it. We definitely need it. I mean, just in numbers, the US capital market is 3 times bigger than the European one. So far, so bad in terms of absolute numbers. But there is one US capital market. By the way, with a lot of exchanges competing, one market doesn't mean that exchanges do not compete. And the largest exchange group of this world is based in Atlanta. And they bought the New York Stock Exchange. So competition per se is nothing bad. And I hope a lot of people here agree with that. But what is bad is a fragmented market where players actually do have national monopolies, where people do not compete. And that is the case in Europe. We don't have a European market on the trading layer. And it gets even worse when it comes to the settlement layer. Each European country has one central securities depository. For very good reasons, very secure, very reliable organizations, but one per country. And if you settle from country A to country B, you have one, it goes on the European scale, it goes back. Super clumsy. Now comes the positive part. If we manage to do the right thing, we'll not only transform our electronic capital market infrastructure to a digital blockchain-based one, we also leverage this opportunity to create truly European market infrastructure. Competition, low prices, best services, and the end of monopolies.
Thank you. There's 2 things I would like to follow up on that you addressed. One was stable coins, and second, I would love to come back to the European aspect. But let's start with stable coins, because we have actually, I think, Tether is coming one talk after, so it's very interesting. Explain to the crowd, what is a stable coin?
Yeah. Stable coin is digital money. A stable coin is a currency, in this case, the US dollar, right, which is backed by US dollars, but in a digital form. Stablecoins are the same issued by private institutions as, for instance, a digital euro, as a digital central currency. And again, talking about European sovereignty, 99% of all stablecoins globally are denominated in US dollar. 99%. So you open up a European newspaper and say, Trump again has done this and that. That finally means de-dollarization. The dollar will lose its grip. No. Maybe, and there's a lot of course, insecurity, right? And it's harmful on the trust side of things. On the other side, when it comes to stable coins, and let's assume stable coins establish themselves as digital money. And if you look at the growth rates, they're pretty impressive, and the Tether person will talk about that, right? And I don't need to do that. So assume it's going this direction. Stable coins as new digital global money. 99% US dollar denominated. And also, again, from a strategic perspective, the US runs a pretty hefty deficit. Okay, Europe is catching up on this one, but pretty hefty deficit. You need refinancing. Somebody needs to buy your treasuries. Stablecoin providers, Tether, for instance, they buy these these treasuries. So by having these US dollar stablecoins, you also have somebody who buys your treasuries. It's a major strategic disadvantage. This is something where Europe is clearly behind. There are European efforts now to come up with euro-denominated stablecoins, and that is something we should definitely support, as we should support wholesale digital euro.
Let's use the last -1 minute to repeat that, because you have your regulator here, and DLD generally has quite some swag on influence on politics, because it's a very influential conference. What do we need to change so that Europe, it was at the cutting edge of crypto 10 years ago. How do we make Europe at the cutting edge of financial crypto system? One market, you said. What else? Less regulation? More regulation? The European Union buying crypto assets?
No, that's not necessary. We need to pull it off ourselves. I mean, the state, come on. I know, I'm not saying you propose that. No. There are few industries where the state is an important actor for defense or so, but for the rest, I think we should get our act together by ourselves. So on the Bitcoin side of things, Europe was leading also on a technology basis. Now, dominating players are either from the US or from Asia, but there are, of course, European players, including us. By the way, we also even do retail. We have more than 1 million retail customers you can buy. So it's good, but this is not as strategic. Stable coins, second element, we need to catch up. Regulation in Europe on the Bitcoin side of things is not bad. I mean, it's not something we can blame on regulation. We have a MiCAR. We were even ahead of the US. It's more a question of courage, of financing, etc. Stable coins, we need to catch up. There are now consortia, also including European banks. This is of major strategic importance. And the third thing, as I mentioned, this capital market infrastructure. This is something we can still win the race. It's early days, and players, including ourselves, are building this digital infrastructure of the future. Here, what Europe needs to do, Europe has a regulatory regime. It's called pilot regime, and it comes up with a sandbox. And I mean, it's 2026, the heat is on, we don't need a sandbox. I mean, a sandbox is for children. 10 years back, you could try it out in the sandbox. If you want to build and scale critical infrastructure, you don't do that in a sandbox, particularly if technology is ready. So that is something which needs to come from the European regulator. The momentum is very positive. Again, I don't want to blame the regulator. It's more a question of speed.
Matthias, thank you for being here. Thank you for what I personally see as a very optimistic picture for Europe as well. And to every one of us, let's make Europe wild again on crypto. I think it's one of the things we can actually win the race. Thank you, Matthias.
Thank you, Mark.